Dell Technologies Dell Beginner's Guide. If you have ever used a Dell laptop in school or at an office, you already know one half of this company. The other half, the much bigger and more exciting half right now, is that Dell is the largest seller of AI servers in the world, the massive computers that hyperscalers and governments are using to train artificial intelligence. This is an educational walkthrough of the business, not investing advice. We're going to look at what Dell sells, who it competes with, why it has been winning, and what to keep an eye on as a learner. So, what does Dell actually do? Dell Technologies pulled in about $115 billion of revenue in its most recent fiscal year, and that money comes from two big buckets. The first bucket is called ISG, which stands for Infrastructure Solutions Group. ISG is the data center business, the heavy industrial machinery of the internet. Inside ISG, the breakout star is AI servers, which alone did $25 billion, up roughly 150% in a year. These are big specialized computers, branded PowerEdge, built around graphics chips from NVIDIA, NVIDIA being the company that makes the GPUs, or graphics processing units, that handle the math behind AI. ISG also sells traditional servers and networking gear at about $20 billion and storage systems at about $18 billion under brand names like PowerStore, PowerMax, and PowerScale. Think of storage as the giant digital filing cabinets that hold a company's data. The second bucket is CSG, the Client Solutions Group, which is the PC business that most people recognize. Commercial PCs, the Latitude laptops on office desks, Optiplex desktops, and precision workstations used by engineers, bring in about $40 billion. Consumer PCs, including Inspiron, XPS, and the Alienware gaming line, add another $7 billion. There is also a small services and financing arm called Dell Financial Services that helps customers pay for big purchases over time. Pulled together, the picture is simple. Roughly half of Dell is data center gear sold to large organizations, and roughly half is PCs sold to businesses, governments, and regular consumers. So, who does Dell compete with, and how does it win? Dell's competitive position is what analysts call narrow, meaning the company has real advantages, but those advantages are not unbreakable. The main rivals in AI and traditional servers are HP, which is Hewlett-Packard Enterprise, plus Supermicro and Lenovo. In storage, Dell goes up against NetApp and Pure Storage. In PCs, the big two competitors are Lenovo and HP Incorporation, with Apple also competing on the consumer side. So why is Dell winning right now? 3 reasons in plain English. First, scale and supply chain. Dell is the largest AI server vendor by revenue, and it has spent decades perfecting what is called the direct model, selling straight to customers and building computers to order. That gives Dell speed and cost advantages, especially when an AI customer wants tens of thousands of servers delivered and installed quickly. Second, customer relationships. Dell already has more than 4,000 AI customers, plus a huge installed base of enterprises that buy servers, storage, and PCs from Dell year after year. That existing relationship makes it easier to sell the next thing, what salespeople call cross-sell. Third, Dell IP storage, where IP just means intellectual property, products Dell designed in-house, like PowerStore. Storage is a higher margin business than servers, and Dell's own storage line has been growing double digits for several quarters in a row. That gives the company a profitability anchor while AI server margins are thinner. The honest caveat is that AI servers are starting to look like a commodity because NVIDIA designs the reference architecture. Every server vendor is building roughly the same box. That is why we call the moat narrow rather than wide. A moat, by the way, is the competitive advantage that keeps other companies from catching up. What are the key drivers for the business over the past 5 years? There are really 3 forces driving Dell's growth over the past 5 years, and they all stack on top of each other. The first is the AI server explosion. AI server revenue went from basically zero a couple years ago to $25 billion last year, and Dell is sitting on an order book, meaning customers who have already committed to buy. of $64 billion in orders and a $43 billion backlog. Backlog is shipments not yet delivered. The customer mix is interesting too. It is hyperscalers like the big US cloud providers, neoclouds which are newer AI-focused cloud companies, sovereign AI buyers which are governments building national AI infrastructure, and traditional enterprises modernizing their own data centers. The second force is the traditional server refresh cycle. Most enterprise data centers are still running 14th generation Dell servers or older. When customers upgrade, the consolidation ratio is roughly 7-to-1, meaning one new server replaces 7 old ones because the new chips are so much more powerful. That is a tailwind for Dell whether or not those customers are buying AI. The third force is operating leverage, which is a finance term that just means revenue is growing faster than expenses. When revenue grew 39% in the most recent quarter, operating expenses actually shrank as a share of revenue. That is what investors love to see, because it means each new dollar of revenue creates more profit than the last one. Storage helps here too, since the higher margin in-house storage line is growing alongside the lower margin AI servers. To wrap up, so here is Dell in one sentence. A 40-year-old US tech company that sells PCs to businesses and consumers and increasingly sells the most expensive AI servers on the planet to the organizations building the AI future. As a learner, the things to watch are not stock-related, they are business questions. Does the AI backlog keep growing or does it plateau? Do Dell's own storage products keep gaining share against NetApp and Pure Storage? And does the company stay ahead of HP and Lenovo as AI servers become more standardized? This was educational only. Now go pull up the company's investor materials, read a quarterly report, and start forming your own view.